Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning, as usual, we'll be taking a look at exciting stock market news, a ton of notable earnings reports, and we'll see which stocks are the morning's biggest gainers and losers. Don't forget, if you're wanting to access your favorite investment research tools on the go and stay up to date with all the latest market news, download the TipRanks mobile app on your Apple or Android device. Links will be in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning following the Federal Reserve raising interest rates by 75 basis points yesterday. Currently, Dow futures are down 0.51%, S&P 500 futures down 0.71%, and NASDAQ futures down 0.95%. Lithium Americas announced that they plan to separate into two lithium companies. The separation will establish two separate entities that include an Argentina-focused lithium company called Lithium International and a North America-focused lithium company called Lithium Americas. They stated that they reinforced their beliefs that separating the North American and Argentine businesses will facilitate unlocking the full potential of their significant asset base to deliver maximum value to their shareholders and other stakeholders. Analysts currently rate the Lithium Americas stock as a strong buy with an average upside of 50%. Adobe's $20 billion acquisition of Figma is drawing scrutiny from the Department of Justice. It looks like the companies could face a drawn-out review of the deal as the antitrust agency is said to be contacting customers and competitors of Adobe and Figma, trying to determine whether the transaction will hurt competition. The $20 billion acquisition is not well loved by Wall Street, as Adobe plunged 17% back in September after the announcement was made. Analysts currently rate the Adobe stock a moderate buy with an average upside of nearly 22%. Marathon Oil has made a $3 billion deal with Ensign to expand their position in South Texas. They'll be purchasing natural gas-focused assets from Ensign Natural Resources for $3 billion in cash, which will nearly double their position in South Texas's Eagle Ford Shale Basin. Marathon said that they expect the deal to be immediately and significantly accretive to key financial metrics, expecting to drive a 17% increase to their 2023 operating cash flow and a 15% increase to free cash flow. Analysts currently rate the Marathon Oil stock a moderate buy with an average upside of 12%. And a little bonus Elon Musk and Twitter news. It is said that Elon Musk could be planning to lay off up to 50% of Twitter's workforce, which would be about 3,700 jobs. It is speculated that employees could be informed as early as Friday as Twitter's new owner works to drive down costs. Now moving over to notable earnings reports. In the after hours today, we'll be hearing from big names including PayPal, Block, Coinbase, Starbucks, and Twilio. Last night, we heard from a ton of names, one of them being Roku. Their stock is plummeting in the pre-market this morning after they posted better than expected results, but had a disappointing outlook for the fourth quarter. Their stock is currently down over 19% as the company expects their fourth quarter to remain under pressure due to tough economic conditions. They delivered a net loss of 88 cents per share, which was lower than the expected loss of $1.29, and saw revenue rise 12% year over year to $761 million, which passed estimates of $696 million. Analysts currently rate the stock a moderate buy, with the most recent ratings coming in as holds with downsides. Shares of SunRun are on the rise after they posted strong Q3 results. The company benefited from robust growth in net subscriber value. They reported earnings per share of 96 cents, much better than the expected loss of 6 cents per share, and revenue climbed 44% year over year to $631.9 million, ahead of the $564 million expected. Analysts currently rate their stock a strong buy with an average upside of 126%. Shares of Booking Holdings were on the rise after they posted strong Q3 results reflecting robust travel demand. Their Q3 revenue increased over 29% to $6.05 billion compared to the $5.92 billion expected. Their earnings per share was up 41% to $53.03 compared to the $49.52 expected. The Booking Holdings stock, who looks primed for a stock split, currently has a price target of over $2,300, coming in as a moderate buy. Now, moving to the pre-market this morning, we've heard from ConocoPhillips. They beat on earnings and increased their dividend. They reported third quarter earnings per share of $3.60, which beat analyst expectations by 16 cents per share. They increased their quarterly dividend by 11% to 51 cents per share and boosted their share repurchase program by $20 billion, bringing it to a total of $45 billion. Analysts currently rate their stock a strong buy with a slight upside of 2.7%. We've also heard from Peloton, who missed expectations on both earnings and revenue. They reported a Q1 loss per share of $1.21, which was 55 cents wider than expected. Revenue declined over 23% year over year, coming in at $616.5 million, missing expectations by over $20 million. They said that their connected fitness gross margin was negatively impacted by the increase to their recall reserve. Analysts currently rate the Peloton stock a moderate buy with an average upside of 75%. Also missing earnings and revenue expectations was pharmaceutical giant Moderna. Their revenue of $3.36 billion declined 32% year over year and was $170 million shy of analyst estimates. Their Q3 earnings per share came in at $2.53, which was 66 cents shy of expectations. Analysts currently rate their stock a moderate buy, and recent price targets vary greatly. We have a downside of 32% compared to an upside of 240%. And we also heard from Datadog. They had an earnings beat for their Q3 and also increased their full year guidance. Their earnings per share of 23 cents beat expectations by 7 cents per share, and revenue of $436.5 million beat by $22 million and was up 61% year over year. The company also announced that they acquired Cloudcraft, a visualization service to create real-time diagrams of cloud infrastructures. Analysts currently rate the Datadog stock a strong buy with an average upside of 65%. And that is just some of the highlights, guys. There has been a ton of earnings this week. This morning, we'll also be hearing from Crocs, Barrick Gold, Marriott, and Royal Caribbean, to just name a few. Now, let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by HubSpot after they had a positive Q3 report. Trading under the ticker HUBS, their stock is currently up 10.4%. They're followed by Etsy under ETSY, up over 9%, and Elf Beauty under ELF, also up over 9%. Our biggest losers this morning are led by Lincoln National after they posted a much wider than expected loss on their Q3 earnings. Trading under the ticker LNC, their stock is currently down 26%. They're followed by Altus USA under ATUS, down over 25%, and Tandem Diabetes Care under TNDM, down 22%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you so much for watching. Have a fantastic day, and I'll see you back here next time.